Hey traders, Jason here from Lever Brothers. So I want to do a state of the market update, although I have to admit that, when I look at the state of the market, I'm looking at the technicals, I'm looking at the charts, I'm looking at the indexes with some breath readings, trying to get an idea of is there momentum? How strong is the momentum? How likely is it to keep going? How likely is it to reverse? But to a greater degree than I've probably ever experienced when I've been involved in the market, which is like 25 years, the market is being held hostage to news. On any given day, the S&P can gap up 100 points or gap down 100 points. At any given time during the day, the S&P could just run up 100 or 200 points, or it could drop the same amount. In fact, right as I was about to click the record button here, the S&P shot up like 300 points in just a couple of minutes. So I delayed recording this. So I'm like recording this and watching the market out of the corner of my eye. Anyways, the point is that regardless of what the technicals say, regardless of what the charts say, regardless of what the state of the market is, because the market is being held hostage to not every news headline, but like all the tariff news, the market could shoot up or shoot down at any point in time. Okay, so just know that it's a high-risk environment. No matter how good or bad the charts look, the market can move in that direction or opposite at any time. So take that into consideration when you're deciding what you're doing. All right, so despite that, I'm going to still do a state of the market here. I'm going to look at the S&P and Nasdaq, and I'm going to look at a handful of breadth indicators to kind of gauge where we are. All right, so let's get into it. All right, so here's the S&P 500 monthly chart that goes back like 10 years or so, actually more than 10 years, about 12 years. So you can see nice rally up here. I don't have to narrate the whole thing, but we're going to move off the COVID low. We got like a cup and handle pattern over here. We got a nice breakout, as you can see. And then we rallied up in 2023 was a good year. 2024 was a fantastic year. Now we've come down hard. We're in the midst of a 3-month losing streak, with the second month being down much more than the first, and now the third month being down even greater than that. What I am eyeing here, again, from a technical standpoint, and again, the technicals matter less now as long as the news is what it is, as my first stop on the way down is going to be the 50-month moving average, which is the blue line. You can see support here, support there, kind of support here, not really for COVID, and then certainly some support here. So right now, that 50-month is right there at about 46.87 when I created this chart, which was just a few minutes ago. And the current price as of when I recorded this chart was just over 5,000. So it's like 300 points away. Okay. Now, as I said, right before I pressed the record button, the S&P shot up like 300 points. So we're not 300 points away. We're like more like 600 points away. But anyways, my first target on the downside would be that blue line. We got kind of close to it, but not really close to it. Second target, if the market is unable to recover, and so my target then would become the lower Bollinger Band. All right, so the upper Bollinger Band in red is here, the lower Bollinger Band is here, and then the middle band is right here. So if the S&P starts trading below the middle Bollinger Band, if it's in the bottom half, just like it did over here, then my target becomes that lower Bollinger Band. Okay, so if we dip below it and recover, that's fine. Okay, if we dip below it and we can't recover, then I'm going to target the lower band. Okay, it happens all the time. Like even you can go back to like over here on the left side where you go below the middle Bollinger Band and you get close to the bottom, you get close to the lower band. We got below the middle there, we got close to the bottom, went below there, sliced through the bottom, went below the middle band there, touch the bottom. So if we go below the middle band here and we can't recover, then my next target becomes a lower band, which is a much further drop. It's like the lower band here is like 4,200. So we're talking, like 800 points below the current price. And actually that'd be 1,100 points below the current price because the market is shooting up right now. All right, so that's what I'm looking at right now. First target, blue line, 50-month moving average. Second target, lower Bollinger Band. Next up, NAS, same exact thing. Okay, first target has pretty much been hit earlier this month right there. But again, if we fail to bounce, if we fail to get back up into the upper part of the Bollinger Band, And again, so we got upper band is over here, lower band is here, middle band is here. If we fail to get into the upper half of the bands, then my target becomes the lower band, which is, you know, quite a ways down there. All right, that's what I'm looking at. Let's look at some breadth readings to get an idea of, you know, how extended to the downside we are. All right, so here's the S&P 500 versus the NYSE. It's like the 10, the 20, and the 50-day moving average of the AD line. And you can see in all cases, like this is either a new low or close to a new low. This is at its lowest level since right over here at the beginning of the year. And then the 50 is at a 50, I don't know if it's a 52-week, it's probably a 52-week low, but it's certainly the lowest level on this chart going back about 10, 11 months. Okay, so certainly we're oversold. We're oversold in the near term. We could definitely bounce. Unfortunately, like not enough time has passed in order, you know, to really form a good base. Okay, and like you tend to get a bottom in one of two ways. Either you get like huge down that just kind of like completely capitulates everyone, and then the market can bounce, then it rests, and it can build on those gains off the low. Or you get like more of a little bit of a rolling bottom where you get positive divergences form. And that's what we got, you know, to start the year here. We got lower lows over here, but then we had higher lows, higher lows, higher lows. But in order for that to happen, this is going to have to, you know, bounce and come back down and bounce and maybe make a lower low. And then there's where you can have positive divergences, but we haven't had enough time for that to happen. So are we low enough to support a bounce? Yes. If it bounces, is that the low? I don't know. It could be, it could not be. You know, gun to my head, I'm going to say no. But we're certainly low enough to support a bounce right now. All right, backing this chart up, this is the exact same chart, except I'm backing it up like 4 years just to give an idea. Of like where we were at other lows. And you can see we're definitely like, you know, a low level there, kind of close there, some low prints there. As far as the 20, you know, we're getting closer. We're getting close to like multi-year lows here. Not as low as it was at the bottom in 2022. Here's the 50. If I extend it back, you can see close to the 2023 lows, not anywhere close to the 22. So my point is, historically, if you look back, the current level is low enough to support a bounce, but it's not so low as to be considered a total washout. If you want a total washout, it hasn't happened yet. Okay, looking at new highs, new lows, this is the S&P 500 up top, and as you can see from these labels, the green is new highs, red, new lows, and you can see here that as the market was heading up here, new lows or new highs completely dried up. New lows started to ramp up even as the market over here was hitting a new high. Then, of course, we collapsed. If we're wondering if, you know, is this bad enough? Well, new lows or new highs here were 1. That's certainly pretty bad. New lows are just as bad as they were way back in 2022 when we pounded out a bottom there and there. And then because of that, we got the high low is certainly at a level that would suggest the market is washed out. So per this, NYSE prints highs and lows. There are no new highs. Lows have ramped up. This definitely is a place that we could bounce from. The market is very overextended to the downside. Okay, here's the same data with the Nasdaq. It's the same thing. We got divergences at, you know, as the market was forming, and now, as you can see, like we have 27 highs out of several thousand stocks. Not very many. New lows are just as high as they were back in 2022, although the market did go much lower after those new highs were put in place. Point being, this is definitely an area that we could bounce from. Whether it's the bottom or just a bottom remains to be seen, but it's certainly low enough and extreme enough print to support a bounce. Now looking at stocks that are above moving averages, is the S&P 500 stocks above their 20-day moving averages and above their 50-day moving averages. As the market was moving up, higher highs, higher lows, printing a new high, we got lack of confirmation with less stocks participating, lack of confirmation with less stocks participating here. Now we have really low prints. This print here is 1.6% of the S&P 500 is above their 20-day moving average, and the print here is only 5.2. So certainly low enough. Okay, this print here, I mean, you can't get much lower than this. Okay, so this matches up with like 2022 there. It's below these 2023 prints. This print here, down here in single digits, certainly good enough to pound out a bottom. So again, based on the number of stocks above their 20s and above their 50s, we definitely have enough weakness to support a pretty hefty bounce. All right, next chart. This is same chart, but different. We got Nasdaq 100 above their 50, Nasdaq 100 above their 20, Nasdaq 100 above their 50, and it's the same picture. You know, we got divergences formed as the market was moving up, as you can see, and now we got extremely low prints. You know, this print here is 2. So only 2 stocks of the Nasdaq 100 are above their 20-day moving average, and this is 5. That's a bad circle. That's 5. Okay, so both these prints certainly would suggest that everything has finally been pulled down. Nothing is holding up, and this is definitely a place that you can bounce from. You can match up lows here, like, you know, low here, matches up with the low here, and you can go across the chart. You got positive divergence here, positive divergence, you know, with that. So whether you're looking at, like this is low enough to create a bottom, we don't have a positive divergence, it's fine, but it's certainly enough of an extreme print to support a bounce. Couple more here. This is S&P 500 up top. S&P 500 stocks above their 200-day moving average. Huge negative divergence here as the market was moving up, but this print was going down, and now we got, you know, the lowest print since back in 2022. Certainly low enough to support a bounce. Last one here, S&P 500 up top. This is S&P 1500 stocks above their 50-day moving average. So the 1500 is going to be the 600, the 500, and the 400 combined. So small caps, mid caps, and large caps. And as you can see here, you know, we got less than 5% of stocks are above their 50-day moving average. This is definitely enough of a washout to create a bottom. So if there was no news, I'd say, wow, we've had huge selling pressure. New highs are nowhere to be found. New lows have ramped up. Stocks above moving averages, the 80 line, like everything points towards the possibility or the likelihood of a bottom being put in place and the market bouncing, you know, at least a decent amount. But news still circles. At any given time, news can come out and just smash the market. Okay, so keep it in mind right now, near term, if you're short, stops got to be really, really tight, and it might be it's either time to go long right now because the market's rallying as I record this, or we're going to get a little bit of backing and filling over the next day or so, and then it's going to be time to go long. But either way, like, we're probably really, really close to a bottom, so be ready for that.